Greetings, traders. David here of Trading Fibs and MarketFi to bring you the daily trend for May 20th, 2015. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Let's jump right into the four major indices today. FOMC minutes today as the market took a little bit of early price action, kind of chopped it out until the meeting minutes, and finished the what we thought be price action to the upside today. Eventually turned itself down on possible news of GDP misinformation. So we're looking forward to tomorrow's price action, whichever direction it may be. Let's start in with the TF. As we can see, price volume once again just barely getting up to that 60-period volume average, as we see price momentum now coming slightly downside towards the bias still to the upside, but forming a bias now to the downside as we're struggling here at these tops, as seen yesterday on the daily trend. Price action holding up here as almost our previous high from 2 days ago. Price action coming down on the YM and Q also, and the ES. Again, doing this proverbial chop on the ES at the highs, and who knows where we go, sitting in between monthly fib levels and weekly fib levels. Jump right into the 5-minute macro view that we see in our price action every day, starting here at opening price 1256.9, as price action came to the downside and came right back up to chop along the daily pivot, waiting at the FOMC minutes here as it popped upside, finding support at the daily gap and finishing out just above the previous high. YM here, same action as the other four indices, coming all the way down here, forming an open range low, finding that support at finding that resistance at the daily pivot, coming all the way up to previous session high 1813.17, and then dropping on that GDP news perhaps, or just didn't like that pop up, finding support all the way back down at the open range low and finishing at the lows of the session. Picture in the NQ, smaller range, chopping along right between the previous low here shown in the purple, 44.9650, and the daily pivot till it popped up above the CAM H4 and brought it back down towards the daily gap and pivot zone. ES here dropping down early session and trying to retest the open, not being able to get above that daily gap, coming right back down here to the previous low. Couldn't write a better script today, guys, as we see price action just pretty much sticking to the lines, going all the way up to the post 30-minute pivot here, and then coming all the way back down to the post 30-minute R resistance line up here, and all the way down to the post 30-minute pivot, and just finishing out at the bottoms. Let's jump right in first before we take a look at our indices. Let's take a look at some of the major commodities that we look at. Looking here at the crude, it wasn't much about the crude today, offering one opportunity here to the upside, but delayed. If you're looking for all gold standard setup, 5 above 34, and the T3 moving average crossovers, easy entry on just one single T3.5 or T3.10 moving average crossover at about almost 2 hours of the market open here. You can see Heikin Ashi bars would have put you in the trade down here at about 7:40 West Coast time. And to the upside, waiting on the pullback, this would have been the better entry, more higher probability, less risk here at 8:06, 11:06 East Coast time. Taking a look here at the gold a very choppy session as well. Silver also offering that slight opportunity here from the market open early session. The rest of it was pretty much chop. Here we are. This is a really nice entry as we see the crossover here. And the Heikin Ashi breaking upside, T3 moving average crossover, and keeping you in trend through the 5 above 34. That's all in the green. Here we can see 6E as well. Not so bright towards the end of the session. Very choppy. And actually, let's take that back. Actually, the Natty Gas had a really nice move today, as we could see price action breaking to the downside here. Solid Heikin Ashi bars all lining up right here on the 534 crossover as price movement came to the downside. And then here on the Apple on a 50-tick range chart, as we can see, price action still in trend to the upside, 5 above 34. Entry back here around May 13th has been all uptrend. Couple pullback opportunities to keep you in. Again, if you're trying to splice into Apple, think this is going higher on whatever indicators you might be watching, or just keep it simple like the charts that I have, is go to a smaller time frame, perhaps a 25 tick or a 10 tick range chart, looking for the same exact setup, or just stick to the 50 or 100 tick range chart for the longer term swing size trader. As the trend continues upside, wait for a pullback and market action to continue upside. Jump right into the price action on the four major indices. As we saw the TF, YM, NQ, and ES at market open, that's right, as we saw in those first bars, price action continuing to the downside, solid Heikin Ashi bars, all four across the board with all red labels, couldn't resist but put you into the trade to the downside. As we saw the TF, that's right, the TF here set up short right at the market open and all the way down. That's right, look at that right there, average move down to the T, never looked back today, 1248.6. How about that? Breaking down below right here as we saw price action break below the 50 and the 144 exponential, breaking below the overnight low at 1253.5, continued downside on a tick count that was coming underneath 250. Sweet move on the TF right in the first 30 minutes and then finding resistance at the 50 MA. Let's take a look at the NQ. That was the chart of the day as the NQ had same price action down to the CAML4, breaking down below the 50 and the 144 EMA on a first tick count 15-minute bar as it was coming from a high above 250 into the 250 zone. We call this 250 zone, or the zone is in between positive 250 and minus 250. And the NQ, as we found some resistance down here and formed the open range low, it was eventually the 534 crossover that put you into the upside. Here's price action broke above the 50 and the 144 and the overnight session low. Here we see price action, first early entry on the T35 long right here at about in the first 30 minutes. Price action pulled back, gave you another opportunity unless you were waiting for an additional confirmation of the T35 and the T310 crossing right here at top of the hour, and then the 534 cross, the gold standard setup right here, which puts you into a trade, a little bit of a chop action sideways. Actually the most ideal setup of the day right here in the early first hour session was right here breaking above the 144 EMA with green bars all across. That is 6 out of 6, giving you 100% probability of a successful trade. That was a nice trade as price action pushed upside. That's right, pushed up to a high of almost 45.07 here on the NQ and then turned itself down to find support here at the overnight session low. We're all pre-FOMC minutes. We're still looking at the first 2.5 hours, and where did price action come down to? That's right, the overnight low on the NASDAQ. Again, you had the first setup here, second setup on the cross, where both T3 moving averages are now in sync. Trend bars, Heikin Ashi bars to the downside, and entry to the overnight low as you broke. What do we count it? 1, 2, 3, 4, 5 above 34. Still a high probability. 5 out of 6 putting you into the trade to the downside. It was the NQ that found support down there at the overnight lows. We're still here post 2.5 hours plus of the market open. T3010 long is crossed upside. Early entry back here before the cross. Again, what puts you in? You got a bearish overnight low finding support and the break above the 50 and the 144. Simple. Don't need many indicators to show you that price action is in trend. Looking at some of the other indices that we're looking at, the YM, again, 3 bars. What do you have? The first bar is the early entry, the T35 short side entry as it crosses to the bear, which gives you a red label over here, T35 down. Second one, T310, which was the both the T35 and the T3 moving average 10 period, which puts you both into the trade to the short side. And then the 534 short, which would have been the additional confirmation, as you can see right there on the bearish confirmed direction to the downside. Lining up with the 534 gives you a higher probability. I know it's nice to have entered up here around 18,290. If you're waiting for a higher probability, less risky trade, you're going to have to wait till about 18,275. But who's going to gawk at 18,275 down to 18,255, keeping you in trend with solid Heikin Ashi bars down to the overnight low and a bounce. Taking a look at the ES, same picture. There we are, first entry, T35 short. As price action bounces upside, place your stop at the most swing size high right there at about 21.2650. Price chops up a little bit. Second additional confirmation on the T3 10 period moving average short right here, and then line up on the 534 to give you a point or two, its price action had broken down here right prior to this bar on the 534 crossover. Again, it's the discretion of the trader whether they want to take the early entry on just the T3 moving average crossover with the bars in trend with a sufficient stop to give it some breathing room, and then price action, or waiting till later for the additional confirmation of another crossover and for the 534 moving average to be in trend. Again, always want to see, we got a bull-bear fight going on here between the 50 and the 144 EMA. And it was all pre-FOMC until the FOMC minutes came out and price action popped to the upside on all four major indices, putting you into the trade. Here we can see the NQ on the setup right here in conjunction with the price action holding above the 50 period moving average and the 144, breaking the overnight session high 4509.96 here. And that's right, it was all upside until price action reacting here. You can see the tick counts all the way up to 1,000 as Heikin Ashi bars keeping you in trend. And then it was all downside on the news of the GDP. So flipping itself to the downside, but that's okay. We go in both directions, as we can see, labeling all reds all across, putting you into the trade as waiting for the additional confirmation on the 534 crossover, or the first initial entry on simply a red bar change and a T3 moving average crossover to the downside. And that it was for the NQ, had an early entry, T3's in sync. 534 crossover gave you plenty of opportunity to make points to the downside. Again, early entry up here. Want to have a less risky, higher probability of continuing in trend, especially if you're breaking the overnight high and below the 144 and the 50. Wonderful chart here to indicate, show how motion in trend with the tick count pushes you with a 534 cross and all the way down to the daily gap. And that's where the NQ finished up the session, right at the open range high daily pivot and daily gap session. And as mentioned before, as we had talked about Apple here on the 6-month 50 tick chart, always looking for swing size trades. If you're on not trading the futures, look to your indices, look to your stocks that you might be trading. Here you see the setup long where you have the T35 and T310 cross simultaneously with a 534 cross. This is one of our golden standard setups. The bullish bias confirmed as seen here, a couple bars later as seen on the right hand chart here, price action breaking above the 50 period moving average and the 144 and keeping you in the trend. So we can apply the same strategy to any chart or any time frame. Please visit tradingfibs.com to find my recaps every day, where you can find the early morning session, find additional information on what we covered in the morning in the live trading room. You can capture today's daily trend also at my website, and also capture some of the stocks in trend that are not covered in this video, the daily trend video recap, where we go over some highlights of stocks that we discovered throughout the day. That same strategy would apply. That concludes today's daily trend wrap up. Feel free to stop by at Trading Fibs or any of my social media outlets to obtain more information. My trading mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Have yourself a blue zone day.